You just finished a big project. The client is happy. The invoice is paid. And now you are staring at an empty calendar wondering where the next paycheck is coming from. If that cycle sounds familiar, you are not alone. Nearly half of all freelancers say irregular income is their single biggest challenge. But there is a way to break that cycle, and the freelancers earning the most have already figured it out. It is called recurring revenue. Welcome to the Freelancers Wealth Blueprint. We help freelancers and self-employed professionals build real financial stability. If you want to stop guessing where next month's income is coming from, subscribe and hit the bell. Today we are talking about how to transition from project-based work to recurring revenue. That means retainers, productized services, and subscription models. By the end of this video, you will know exactly how each model works, how to price them, and how to pitch them to your existing clients. Let's start with why recurring revenue changes are everything. When you work project to project, every month starts at zero. You have to find the client, pitch the work, negotiate the rate, deliver the project, invoice, wait to get paid, and then do it all over again. That is the feast or famine cycle, and it is exhausting. Recurring revenue flips that. You wake up on the first of the month already knowing your baseline income. You can plan your expenses, save consistently, invest predictably, and actually sleep at night. Businesses with recurring revenue are valued at 5 to 10 times annual revenue. Project-based businesses are valued at 1 to 3 times. That gap tells you everything about which model the market thinks is more sustainable. Now let's break down the 3 main recurring revenue models for freelancers. Model 1 is the retainer agreement. This is the most common and the easiest to start with. A retainer is a contract where a client pays you a fixed monthly fee for an agreed-upon scope of work or guaranteed availability. There are 2 main types. A scope of work retainer means the client pays a set fee for specific deliverables each month. 4 blog posts, weekly social media management, monthly bookkeeping. The scope is clear, the price is fixed, and both sides know exactly what to expect. An availability retainer means the client pays to guarantee your time and access. They are not buying a specific number of deliverables. They are buying priority access to your expertise whenever they need it. This works best for strategists, consultants, and specialists whose value is in advice and quick decision-making. Retainer pricing varies widely by industry. Digital marketing retainers typically run $2,500 to $5,000 per month. Design retainers can range from $2,000 to $8,000. Even smaller retainers in the $500 to $1,000 range add up fast when you stack 3 or 4 of them. Model 2 is productized services. This is where you take something you already do well and package it as a standardized offering with a fixed scope and fixed price. Instead of custom proposals for every client, you create a menu. A website maintenance package for $299 per month. A monthly SEO audit and optimization service for $1,500. A social media content bundle at 3 different tiers. The key is removing the custom negotiation. Clients see the package, they see the price, they sign up. Solo freelancers running productized services average around $74,000 per year. Larger operations with teams and multiple packages reach well into the millions. Companies like MixBloom offer social media packages ranging from $199 to $549 per month per client. Design Pickle and similar services charge $5,000 to $8,000 per month for unlimited design subscriptions. The model scales. Model 3 is the subscription or membership model. This works especially well if you have expertise you can deliver to multiple clients simultaneously. A monthly newsletter with industry insights. A members-only resource library. Group coaching calls. Templates and tools updated monthly. The subscription model lets you serve many clients with one effort, which means your income is not directly tied to your hours. Now let's talk about how to actually transition your existing clients to recurring revenue. Start with your best clients. The ones who keep coming back with new projects. The ones who email you every few months with another request. They already trust you. They already know your work. They are the easiest conversion. Here is the pitch. You look at the last 12 months of work you did for that client. Add up the total. Then show them that a retainer would give them the same or better output at a predictable monthly cost, with the added benefit of priority access and faster turnaround. If a client spent $18,000 with you last year across 6 separate projects, a $1,500 per month retainer is the same annual spend, but with guaranteed availability and no gaps between projects. The value-based pricing rule is simple. If you charge $1,100 per month, your work should create at least $7,500 per month in value for the client. That 5-to-1 ratio makes the retainer an obvious yes for any business owner doing the math. 3 or 4 retainer clients at $1,200 to $3,000 per month gives you $4,500 to $12,000 in guaranteed monthly income before you take on a single new project. That base changes your entire financial picture. It covers your living expenses, your tax savings, your retirement contributions. Everything above it becomes growth capital. Here are the practical steps to get started this month. Step 1. Audit your past 12 months of client work. Identify which clients came back more than once. Those are your retainer candidates. Step 2. Package your most requested service into a clear monthly offering with a fixed scope and fixed price. Write it up as a one-page proposal. Step 3. Reach out to your top 3 repeat clients. Show them the value comparison. Past project spending versus predictable monthly retainer. Make it easy to say yes. Step 4. Set up automated monthly invoicing. Use a tool like FreshBooks, QuickBooks, or Bonsai. Remove friction from the payment process. Step 5. Protect yourself with a clear retainer contract. Define the scope, the monthly fee, the payment terms, and what happens if either side wants to cancel. A 30-day cancellation clause is standard. Freelancers who use retainer agreements report 30 to 50% higher annual earnings than those who work purely project to project. The income is not just higher, it is more stable. And stability is what lets you build real wealth over time. Stop starting every month at zero. Build the base first, then stack projects on top. Subscribe for more strategies to build financial stability as a freelancer. See you in the next one. This content is for educational purposes only and does not constitute tax advice. Consult a qualified tax professional for guidance specific to your situation.